Assalamualaikum and hello. My name is Nura Shida binti Rahman and my group team is Nurul Izzati binti Zamri. We are from KBA242 Today we want to share with you about fundamental analysis. What is a fundamental analysis? Fundamental analysis is a method of measuring a security's intrinsic value by examining related economic and financial factors. Fundamental analysis study anything that can affect the security's value from macroeconomic factors such as the state of the economy and industry conditions to macroeconomic factors like the effectiveness of the company's management. In the fundamental analysis, we have economic analysis, industry analysis, and company analysis. So today we will go through one by one. Firstly, we will talk about economic analysis. What is meant by economic analysis? Economic analysis is a study of general economic conditions that are used in the valuation of common stock. Stock prices are heavily influenced by the state of the economy and by economic events. For example, when the level of economic activity is low, stock prices are low and your profit will be decreased. And when the level of economic activity is high, stock prices are high, reflecting the prosperous outlook for sale and profit of the firm. Next, we will discuss the key economic measures that an investor must monitor as part of his fundamental analysis. First is gross domestic product, which is GDP. GDP is a market value of all goods and services produced in a country over a year, where they measure a country overall economic output. Generally, when GDP goes to increase, the economy was in the good condition. The second is industrial production. It is to measure the activity or output in the industrial or productive segment of the economy, for example, manufacturing and mining. So when the product increase, the economy will be in a good condition too. And then we will talk about the key economic factors that can be affect the business cycle. Firstly, in government fiscal policy. For example, we have a tax, government spending, and debt management. Second is a monetary policy like money supply and interest rate. And other factors that can affect the business cycles are inflation, consumer spending, business investment, foreign trend, and currency exchange rate. Lastly, that I will present is about the four stage of the economy cycle. The four stage of the economic cycles are recovery, expansion, decline, and recession. We will go one by one. The first stage is recovery, where it is the strengthening of the economy after a recession. During the period of recovery, there are expansions and a rise in economic activities. When the demand start rising, production increase, and this causes an increase in investment. There is a steady rise in output, income, employment, price, and profit. Businessmen gain confidence and become optimistic. The second stage is expansions. It reflects continued strength and optimism about economic growth. Thirdly is the decline, where it involves a slowing down of the economy after an expansion that may have been moving too fast. Then the cycles move into a recession, where the economic contract and permission regimes. Then the recover cycle begins again. Stock equity related securities such as unit trust and convertible are highly responsive to the economic cycle. During recover and expansion, stock price are up. As the decline approach, stock price begin to decline as well. Growth-oriented and speculative stock tend to do especially well in an expanding economy. But the important thing is to know is stock price usually change before the actual forecast change become apparent in the economy, and stock price trends are another leading indicator of the often used to help predict the direction of the economy itself. So now we have already done about economy analysis. For the next industry and the economy analysis, I will be passing this topic to my group mate Izati to discuss it. Thank you.
Okay, next we look at the industry analysis is a market assessment tool used by the businesses and analysis to understand the competitive dynamics of an industry. It helps them get a sense of what is happening in the industry. For example, the demand supply, degree of competitions within the industry, state of competitions of the industry with other emerging industries, future prospect of the industry taking into account technology changes, credit system within the industry, and the influence of external factors on the industry. Industry analysis for an entrepreneur or a company is a method that helps to understand a company's positions relative to other participants in industry. It helps them to identify both the opportunities and threats coming their way and give them a strong idea of the present and future scenarios of the industry. The importance of industry analysis as a form of market assessment is crucial because it helps the business understand market conditions. It helps them forecast demand and supply, and consequently financial returns from the business. It indicates the competitiveness of the industry and costs associated with entering the existing industry. Analysis helps to identify which stage an industry is currently in, whether it's still growing and there is scope to reap benefits, or has it reached its saturation point. Last but not least is company analysis. It's a process carried out by the investor to evaluate the securities, collecting information related to the company's profile, product and services, as well as their profitability. A company analysis incorporates basic information about the company, like the mission statement and the operations of the goals and values. During the process of the company analysis, an investor also considered the company's history, focusing on events which have contributed in shaping the company. Also, a company analysis looks into the goods and services provided by the company. If the company is involved in manufacturing activities, the analysis studies the product produced by the company and also analyze the demand and quality of this product. Conversely, if it is a service businesses, the investor studies the service put outward, evaluating the financial performance of the company on the basis of qualitative factors and quantitative factors. Qualitative factor is the quality factor that affect the value of the company. The first one is business model. It describes the company's operations, modes of revenue generation, nature of expenses, organization structure, and its sales marketing effort. Number 2 is management. Good and capable management teams generates profits. Management should attain the state objective of the company and create value for all stakeholders. I guess that's all from us. Thank you.